Hi guys, it's Callum Newman here. I've got a special report for you today. Now I've memorised this with the Guru of Gold, the Count of Copper, the Lord of Lithium, the Prince of Precious Metals, and the man with a wonderful sense of dress. I don't know if you can see in this. This isn't planned. We're actually wearing the same outfit today. So he's Hedley Widdup, who's the Chief Investment Officer of Lion Selection Group, and he follows the junior resource market, invests in the junior resource market, and there has been a lot going on in here, and there's a lot to talk about, right?
Wow. Yeah, and that's the best introduction I've ever had. But
thank you.
From someone who's looking incredibly dapper. So compliment you on your dress style today.
Thank you, sir. So the reason I went back, so we did this in August, right? Mm-hmm. So 6 months ago, thereabouts, and I watched the whole video again, and right at the end you said that you felt within the context of the junior resource market had come under some pressure, that there needed to be a final capitulation move before the whole cycle starts again. Mm-hmm. Now, I haven't been following the sector super closely lately, but I do know lithium has come under a lot of pressure. Nickel is they're now shutting down mines or putting them into care and maintenance because it's collapsed. The whole narrative around electric cars is suddenly it's a little bit more dubious, or what have you. Is this what you were alluding to at the time? You said you weren't sure what that capitulation would look like. Is it happening in front of us?
I think capitulation, in the context that we were talking about it, is something which will be heavily influenced by the broader equity market, and that's what you do follow very closely, and probably more so than myself. If you look at all the big indices, and forget whether they're a resource index or an industrials index or a market index, none of them have gone anywhere near down. They've sort of tracked sideways in this whole time. So what I watch is liquidity has fallen out of the market, which doesn't affect the bigs. It really affects the micros, and we've seen immense share price deterioration at that end of the market. So you could probably think that there would be a capitulation around that, but what we've seen is a negative commodity price lead that hasn't been reflected in the major cap stocks. So the BHPs and the Rios have kind of softened a touch, but not come back strongly. Now, it could be that this cyclical turnover from the bust occurring to going through the bottom and making way for the new boom could very well be accompanied by the Rios and the BHPs just pushing through without too much deterioration.
Well, my old buddy iron ore is propping them up.
Well, I think so, and that is probably what holds back that notion of capitulation, because whilst there is still a glimmer of hope in a sector, then sentiment won't go from we've gone through the bottom to it's all bright from here. I think there's probably a lot of building misery, and nickel is something which affects junior companies right through to BHP. Lithium is much more a junior thing. Well, there's plenty of mid-tiers involved in that now. So those things have built up as negative factors since circa August, and certainly through the period of 2023. They've been some of the worst commodity price collapses that we've seen as this cyclical rollover from the top has occurred.
So I'm trying to, in a sense, you must be kind of happy about all this because you've been waiting for this cycle to turn and go, and you want to go shopping for this stuff while it's in distress, right?
I'm trying not to have too much of a shit-eating grin about that, because we've got about $70 million of cash in a vehicle which is capitalised at less than that. So you get portfolio and cash, all for less than the value of the cash. We sold out of something we thought we were coming to the top of the market. Turns out we were, and we're ready to invest. We've put away small amounts, but we're sitting back saying, well, we could invest heavily, but is now the time yet or not? So we're feeling very flush about the opportunity which sits in front of us. And this one of the biggest risks as you go through this period of time. And by this period of time, we've seen similar events as this time after time after time, cycle after cycle. They always look moderately similar in terms of how money moves in and money moves out, and in the context of mining, how commodity prices behave as well. So we're watching all of that going, okay, we're coming through a very low patch. Are we at the bottom yet? Probably not, don't know, but doesn't feel like it yet for us.
And you're talking about the resources in general?
Yeah. And a cyclical nature of mining cycles. You can't pick the bottom, and you'd be foolish to, because sometimes the rebound off it can be very strong, in which case you invest through the period where you feel there's a lot of weakness. So that's something which we're feeling very pleased about, because we're able to inject money into stories. And if you like it that much, you can follow your money and build your percentage, because one of the biggest risks for investors through this period of time is being liquid enough to follow those. You might be able to sense as a good opportunity, but if you've lost money on a lot of things, on paper at least, your enthusiasm to follow that money will be impinged by that.
One of the other things you mentioned in that video that we did last time, you talked a little bit about how if the lithium story was sort of propping up the market at that point, and you referenced like Core Lithium, Liontown, and you said at the time, well, if those guys get into trouble with their development, that's going to kill the vibe for everybody. So they're now in a lot of trouble.
And where are we now?
Going down fast. So from a mining cycle, is there anywhere that's going to get okayed into production? Well, perhaps uranium, as which we would
so the uranium price has been a very positive performer. If you had to pick a commodity which is still going strongly, uranium is a strong candidate for that. So you're looking at a spot price in uranium, and in all commodity markets, there's often long-term contracts, and they're settled in different ways to spot sales, and then a spot market. And in some commodity markets, everything is at spot. Like gold, predominantly is sold at spot. You can forward sell gold and you can hedge it in various ways, but a vast majority of gold changes hands at a price which reflects the spot price. And it's a strong reference in even longer dated sales. Copper, you might sell a batch of copper over a 3-month period, all referencing a spot price and movements in the spot price. Iron ore, it's load by load. Uranium is sold on long-term contracts predominantly. Now, I'm not a well-educated student of the uranium market, so I'll be a bit flippant with the figures here. But if I had to look at where the greatest liquidity was in the uranium price at the moment, as in at what price are you selling most uranium, it's going to be well back from the spot price. There's very, very small amounts which are traded at spot. There's been phenomenon in the uranium market recently where there's been, financial participants, ETFs, stockpiling physical, buying physical, and
Sprott?
that's
is it the Sprott crowd?
Well, I don't want to name names, but it starts with S and it ends in Prot. They've. If you think about it, and I don't want to accuse anyone of cornering a market, but when a new financial participant comes in to purchase material in a commodity market, it adds demand. It's not being consumed, so it's artificial as far as demand goes. And I'm
thinking uranium's not that big either, right? Like it can't be that.
Well, the spot
relative to oil and
the spot market for uranium is very small. So has it affected the long-term market? I don't know. I'm not seeing what's going on in the long-term contracts which are being written. But it pushes us to a point now where if you're a utility and you want to be operating and you're thinking about the purchases you're making of raw materials for the next 20 years. You're not a gold refiner. They're thinking a week out. Uranium driven power stations are thinking years and years and years out, because a coal-fired power station, you may have a bit of flexibility to run the station down a bit, build the station back up, turn it off, well, heaven forbid, but you can do that without having a runaway reaction or something like that. Uranium, generating power from uranium is, it just needs to be managed very carefully over long periods of time. So you don't want to find yourself in a position where you've run out of uranium to fire it. You don't want to be down to a week's supply. You want to know that you've got a very robust supply of uranium going into that plant. So they're traded on long-term contracts. I don't think the spot market is as relevant to those things, but it does heavily affect equities. So if someone's looking for uranium or developing a uranium project, the spot price feeds right into that.
So do you think, a lot of those mining species that are running have to build their mines or get them going again. Do you think the market will support them when they go to raise the money? At the valuations
they're capturing the most liquidity at the moment, right? And they have been for the last 12 months. They've been capturing liquidity. So if you wanted to raise money in uranium, it was easier to do than in gold. And right now, if you wanted to raise money in uranium, it'd be easier to do than probably in lithium. And that's topical, because 12 months ago, raising money in lithium, all you had to do was breathe a word and the money would flow towards you. So it's a hotspot as far as liquidity goes. It's always harder to raise money for a development. If you need $150 million to build a mine, well, you need a debt. participant to be active in that. So you need a bank to be lending you some of that. And they're going to need to see contracts in place for sales. That's going to affect their model. They're not going to use a spot price in their model. So they're going to be modelling your project at a price which is well back from what that spot price is. I don't have a perspective for what that liquidity is like. I tend to think there are banks that would do that. They're probably going to be international banks rather than Australian banks. So, you know, the question would be, how much debt can you get for those things? Because you couldn't fund $150 million project development at the moment with equity from the market. It would be probably too dilutionary for most companies, or it would just be too large an amount of money to be able to raise in that context. If you need to raise 50, different story. But if you need to raise 500, harder again. So you're absolutely dependent on the debt markets then.
So I remember you were here last time, and you said gold is your preferred metal just because it's easier to mine. They were already down in the dumps, right? So I don't feel like the things that hit in lithium and nickel are really affecting those gold juniors as such. And the gold price is still strong, right?
Yep.
So is it possible that like the gold speckies will bottom here and then the nickel ones over here a little bit? You know what I mean? Like gold is probably already had its.
I tend to think there's a bit of catch up being played in sentiment. Gold has the strongest lead out of most of the juniors that I'm looking at. The micro cap stories don't really look like they've captured much of that. So, you know, that's a shame for them. But that's made, you know, in a period of time when lithium was strong and nickel was strong and uranium has been becoming strong and iron ore has persevered, gold exploration or gold development has been one of the most contrarian things you could invest in. So when we cast our eye across the market and say, well, I'm interested in risk, how hard is it to produce and sell? How hard is it to fund? What's the jurisdictional risk look like? We've often come up with a concoction of, well, here's our list, and the things that look best on risk and look great on value have been very strongly favoured by gold for all of those reasons. So I'd probably paint the picture or make a cartoon of this and say, well, over the last sort of 2 or 3 years, gold exploration sentiment collapsed the first, and that was affected by a long string of less than successful gold developments. So if you want to have your money in a developing gold play or explorer going to developer, it's been a place where it was easy to torch money. There's been some nice stories that have put together a great development story, but then, you know, when rubber hits the road, particularly off the back of COVID and inflation, I mean, cost inflation in Western Australia has been one of the most inflated costs in the world because it's been a small population of workers. You've had new lithium mines injected into that and a huge demand for work. So wages have just spiked. So if you've been a developing gold mine, you've been hit by that pretty hard. And it might not be your fault, but lay on top of that, a grade hiccup or something like that, and it's become really hard. So investors have sort of seen that and gone, well, you know, there's brighter lights. Most of those brighter lights have faded. Lithium in particular, I mean, that price, depending what price you look at and what currency you put it in, it's between 75 and 90% down on its peaks of 2021. Nickel.
Just stop there for a second. So there's lithium spodumene, and then there's the chemicals, the hydroxide and carbonate or whatever. Mm-hmm. So what's the one that's gone down 90%? The spodumene price or all of it?
If you price, I mean, the reference price, which I think you could get most easily for lithium, is a lithium carbonate price, which is quoted in Chinese yuan.
So that's the refined, that they take the Aussie stuff and the brine.
Oh, it's a middling product.
The middling thing.
That can be used, yeah. So so if that's your reference point, then, you know, anything in spodumene is going to be priced as a, you know, back out some costs and some shipping. And
so if that's going down, everybody's in panic mode.
Yeah. And I mean, whilst if you're a spodumene producer, you're not selling lithium carbonate, you're selling lithium units in a spodumene concentrate. But you know, the equities had mimicked the trend of that lithium carbonate price on the way up. It was interesting that they resisted that on the way down. So the lithium carbonate price started to slip. But as you find in a lot of spaces, particularly new and interesting things, and if they're a little bit tech aligned, I think a lot of people are really susceptible to just swallowing or, you know, drinking that Kool-Aid or believing that story, or just persevering with what they think the fundamental is for longer. there was a delay in the lithium equities coming off. So the producers kind of, resisted it and then started to go. And then, there's still been I suppose there's an overprint of, if you're finding something interesting, big, you get an uplift in value, which kind of defies all price movements. But
Azure.
Yeah, Azure, Wildcat. What's fascinated me is you could achieve $1 billion market capitalisation very quickly on projects which have just been discovered against the backdrop of your nearest reference price falling so significantly. And it's not like a 25% fall. It's a huge fall.
Well, I remember you were here last time. You said you went to the Diggers and Dealers conference. You were interested in gold and you were interested in lithium projects, right? So everybody's now, investment banks are coming out, it's going to be in surplus for another couple of years, da-da-da-da-da. Mr. Lithium, do you follow Joe Laurie, Mr.
Yes.
Lithium?
Yeah.
Okay. He's saying this is a short-term blip in a long-term story, which I presume is what you believe? Yes?
I don't. No. I don't. I think
care?
with a market like lithium, it's difficult. It's really difficult to forecast because you've got the forecast uptake of EVs as the main driver. Nobody's got that right so far. And if you're involved in a space, it's hard as a human to separate yourself from the emotional, I want this to go well. And if you are a specialist in a space, a lot of your investment is made in that space. So, you mean
like he's talking his own book kind of thing?
Well, there's always that
That's the
element
risk
that creeps in. He doesn't deny that things have got a lot harder, and I think that's the part of it that you need to say. Well, how are we digesting the facts in this space?
Are you still interested in lithium?
I'm very interested in lithium. I'm just a little bit circumspect about buying into something when the outlook is, there's going to be more down before there's any up. I don't think the up is going to be sharp.
Like a V sort of thing,
well,
as they say.
I don't think that, the lithium price spiked from 2020 through to 21. I don't think and that was a 15 times multiple on the price through that period. I don't think that can be repeated. So what's the lithium price upside from the bottom? Well, a couple of things you've got to incorporate in that and how you make your assumptions are. The lithium market has got bigger, and I mean there's more customers and there's more supply all going into the same pot. That tends to remove volatility over time. So, and a 15 times up and a 90% down,
it's pretty volatile.
Is volatility. Yeah. So I'd expect to see less of that. When we got to the peaks of 2021, there was what I would call unnatural sized margins going to the producers of raw material and to the producers of shitty raw material. So
it was like iron ore in 21 when it just had that big upswing and it's like everybody's booming it.
It was like iron ore
it was never going to last.
In 07, 08. There were people, DSO, or direct shipping of ore in small quantities and of very, very low quality. I mean, there was DSO going out at 1.5% lithium LiO2. A benchmark concentrate of spodumene is somewhere between 5.5% and 6%. So if you could sell something which is effectively straight out of the ground 1.5%, and there was buyers for it, that tells you that it's just red hot in terms of demand and supply is just not catching up. But it did catch up. So you don't tend to see those sorts of margins in a long-term commodity market, except in exceptional circumstances. And I think when you're taking what is a small market, very small market, the lithium market, and expanding it rapidly, very quickly, supported by government incentives and saying we need to have lithium because we need to be able to expand our battery production rapidly, a wheel falls off at some stage, and that's what we've seen. So the cars weren't sold as quickly. There's inventory building up of finished vehicles. There's more and more batteries now. So I think we've had that first hiccup. I'm sure there'll be more, but there's going to be a bit more caution from buyers. Buyers of lithium are going to say, well, yeah, we know now how that works, so maybe we'll buy more in the lower parts of that and have some stocks that we can burn down as the price goes up. And they've invested in offtakes and things. The more money that goes into provoking supply out of the ground, the more you've engineered oversupply. So it's a clever thing for off-takers to do.
So as an investor, though, do you have your projects that you're interested in? Are you more concerned now with the deposits and the drill results or the outlook for the lithium market? Or it's a mix of both?
I'm probably more concerned about drill results because I think I think once you've got a history in a stock, if you've achieved $1 billion valuation and you've had some billionaires buying in to maintain control of that story, that's something you probably don't want to be diving hard into as an investor of our size, or an investor of any size other than one of those billionaires. So, there's a subset of lithium stories which have that quality.
Do you mean because it's just not important to them in the sense that they're so rich that...
Well, what's their outlook? Do they want to buy the whole thing? If you're buying in going, Gina Reinhardt's buying in, and she's going to take this over, if that's your assumption, what price is she going to buy the whole thing for? So, Liontown's a great example. She bought in for above $3.
Why did she buy that at that price?
Well, you'd have to ask Gina.
Isn't
We should get her on the podcast. I don't know is the answer. I think you could assume there is a very long-term ambition to have control of the larger deposits. But do you need to own the whole thing? I don't know.
But if she just waited a year, she would have got it a lot cheaper.
Well, it got cheaper because she bought it above $3 and stymied the bid. So now the speculation around, as of I think it's the 12th of February, the commercial laws which dictate the price that you must pay if you come and revisit and try to make a control transaction take place have fallen away, in which case she can pay any price she wants. So she could creep, she could make a takeover bid. All these things are possible. But if you'd bought at $3 thinking, Gina's going to buy the whole thing, you're going to be disappointed because she's not going to have to pay $3 in Liontown anymore. In Azure, she has manufactured a takeover bid in partnership with a lithium industry participant. And there are other stories where this similar speculation swirls. You've got to be really careful when you speculate about M&A. So when that gets wound up in a story, for the amounts of money and the percentages which I need to deploy from Lion, I say, okay, let's stand back, because there's as good a chance that we're going to lose money on this as there is that this M&A comes true. And are we going to be able to affect any kind of influence there? Probably not. So I'm interested in drill results, because if someone is finding something new, that's the opportunity to get involved before all that silly stuff happens. And if it happens, great, it's extra upside. If it doesn't, I can remain focused on whether or not it's a good project that I want to be involved with long term. So that's where I see opportunities in lithium. And to be clear, I think there's downside in the price. In 10 years, will the price be above where we are now? Yeah, I think there's a good chance of that. But the journey in between times could be quite complicated. And do I think there's a future for lithium? Yeah, I do. I mean, there's a lot of discussion that creeps into this about solid state batteries and sodium recipes and all kinds of things like that.
The disruption of lithium itself.
Yeah. Lithium has the ascendancy at the moment. So there's a big investment which is required to tilt into a different chemistry. It needs to be better, in a way that Betamax probably wasn't that much better than VHS, that the whole market swung towards it. And in the same way that MySpace wasn't that much better than Facebook. What is in the ascendancy comes down to who's got the better story at the time. And if you can consolidate that ascendancy, then, it'll probably just remain so. So I think lithium has a good incumbency there. What
do you make of Ken Brisden going across to Quebec there to run Patriot?
Well, I think he saw a very good quality project in terms of a large pegmatite.
Is this one you're following then?
I'm following it, but we're Australia focused in terms of our investments. So Ken is a very level guy. He is an exceptionally level guy. He is very technically competent, and he understands better than most people. Selling lithium in a tough lithium market is more tough than you think it's going to be. So he's been through all of that.
Is he selling the story of the stock or selling the actual product?
Both. But selling the product is harder than selling the story.
Well, he's only a deposit though, right?
Yeah.
Yeah.
So he's climbed all the greasy rungs of getting to the top of understanding how that works. So I would give great credibility to Ken's ability to stamp that and say, this is going to work at some stage. And that's the point, is at some stage, it's not going to be all the time. It's in the ground. It's a strategic asset. I'd be mystified if there weren't people looking at it from that perspective. But are they, will they, when are they going to move in a strategic sense? It's hard to say.
You could wait for a long time.
Yeah. And, so far, a lot of the strategic discussion around spodumene deposits has been limited to Western Australia. So, is anyone making a move on trying to consolidate strategic deposits in places like Canada? At the moment, not so much. So it could become that way, but, having seen the price fall, Patriot has fallen with that. Whereas there's a subset of explorers in Western Australia that have defied that. So, I think they're all interesting market themes.
So Ken came from Pilbara Minerals. So is that your, for want of a better, the cheerleader? If we see that one, the market sort of bid that one up again, whenever that day comes, if it comes, does that have to happen for the juniors to rise in the wake of that again? Like, do the existing producers have to lead the pack out of this dump?
Yeah, look, typically, I think in any commodity space, that's how the miners and the explorers within that microcosm would behave. The miners would turn first on the basis that
cash flow.
When you go down, your costs have to follow. You fix your costs, the commodity price goes up, your margin instantaneously expands. So that's good for the equities if you're a miner. So I think you would see those guys turn first, and then there's going to be a few carcasses to pick over, I suspect, because we don't. I said before, there were some very unnaturally large margins to the producers of rock in that period of time, peak 2021, early 22. With those having eroded, what's the natural margin? I think it'll be much smaller. So, the price doesn't have to rise as far for their set of costs to make them make money, and it probably settles much closer to where their costs were, and everybody's costs are influenced by everybody else. So you don't pay more for geologists in iron ore than you do in lithium. That all tends to level out, but as one moves up, it tends to drag up the costs for everybody. So,
all right, I'm going to whip out a bit of Sherlock Holmes on you.
Yeah.
Okay, you didn't expect that, did you? I'm going to say...
are you going to fight me, or are you going to deduce something?
No,
he does both, right?
This is the famous thing. I draw your attention to the dog in the night time, and you say the dog did nothing in the night time. Go on, you say the dog did nothing in the night.
The dog did nothing in the night time.
That was a curious incident. Now, the reason I bring that up is copper... Copper was the one that was supposed to be the hero of all this thing like 2 years ago. Everyone was hot on copper, and it's literally done nothing.
Yep.
And there's all the stocks are dogs.
It hasn't done nothing.
Well, kind of has.
It's come down. But
it's cool. You know what I mean. And there's that 29 minerals. Is it 29 minerals?
29 metals. Yep.
It sort of came to the market, got dumped. There's another one that I can't remember. Anyway, none of them are working. Everybody wants a hot copper story. You can't get one except for Samphire, maybe, which has had that aging mine and then went into Spain or whatever. Is copper going to be the surprise story at some point? And finally that breakout will happen because it is driven by other things than electric cars and decarbonisation.
Yep. Well, I mean, copper's one of these great stories, which is the new world and the old world. You need it for power lines, and we're talking
with
about
India going crazy.
Yeah. Well, India is a really interesting one. China moved the market for commodities in the 2000s because it had a very large population which was pushing through what is classically regarded as being the income per capita threshold of you will start to move the market. You will start to see a meaningful growth in commodity consumption as you go through about $4,000 per annum of per capita income. And then it gets to a level where it falls off. It's a wealthy enough nation. It tends to not influence prices anymore. So China took copper from one paradigm to another. It took it from a paradigm that was capped at maybe $2.50 a pound to a paradigm that was capped by more like $6 a pound. And it was a real step up. If you look at a copper price chart from 1970 through to present, you will see that. You'll be able to pick exactly where the rubber hit the road from China buying things like copper. And you overlay that with iron ore, you'll see the same thing. Brand new paradigms. India's not at that level yet of having that, enough income per capita. But as enough Indians are sucked into the middle class through entrepreneurism and prosperity, then I think that is very possible. Are we thinking about India now the way that we were feeling about China in the 90s? I think probably. Are we feeling about India now the way we were about China in the noughties? I think not yet. So yeah.
So, but do you go along with this idea that there just hasn't been enough copper exploration success in the last 20 years, and the grades are getting worse?
Yeah, that's
the pitch that you always hear, right?
There's loads of copper in the ground. There are loads and loads of deposits which are, for some reason or not, quarantined. And if you could have a $6 a pound incentive price, which was more of a floor than a cap, you'd see some of those getting forced into production. The difficulties would be overcome. I mean, there's jurisdictional difficulties. There are temperature difficulties, by depth or just geographic location. There are metallurgical difficulties, and there are some very smart people working on some of the technical things, and some of those problems are getting solved. But I think a lot of people now would say that most copper production is higher than 4,000 metres, and it's less than 1%. So it's already pushed into that difficult basket. But does that mean that you need a copper incentive price of $25 a pound? Well, who's going to pay $25 a pound? There's got to be a levelling, between the supply, which there's got to be a cost incentive, and demand. What will demand pay for that? And how much of that perceived demand is going to be brought to bear? So I think you've got to think in terms of long-term averages for a lot of this. And copper is one that...
Because copper on your list, it was like gold, copper, nickel, right? On the preferred easy kind of scale.
Well, gold, copper, nickel, lithium, all things which are needed. But you've got to time your entry. And copper is something where I think of... I think there's some numbers which are roughly like this. I'm going to get them wrong. So just think of it as a cartoon. Copper demand doubles circa every 25 years. And in the last 50 years... we've used more copper than we've used in the entirety of history before that. So, that frightens people. But when you think of it, does that mean that in the next 25 years we're going to double demand again? Well, do you have China coming to market? What's the effect of all the industrialisation of the various countries? We used to talk about the BRICS in the noughties: Brazil, Russia, India, China. They all have very different outlooks now. China has probably graduated to some extent. India is still coming. Brazil...
Nobody cares about it anymore.
Well, Brazil was big, but not big enough, and it's to some extent self-sufficient. Russia, well, that's a different one, isn't it? So
South Africa got in there for a bit.
South Africa was, but that
nobody cares anymore.
No, that has social problems, which will probably hold back the ability to push up incomes. So, there's other nations which will come along as time goes on as well. So, I tend to think that the average of the last 25 years need not be the template for the next 25 years, because we've seen China come into the market. And I suppose if I had to overlay that then on a copper price chart, are we going to see the copper price push above the roof prices which were established by China coming to the market and being a resilient commodity purchaser? I just find that really hard to swallow at the moment. And I don't think that electrification is enough to push that. So, my 10-year outlook is we trade within a paradigm that was established by the Chinese coming to the market.
One of the gents wrote in and talked about American West as a specky that had a bit of a run, didn't it? There's copper?
Yeah.
What do you think of that one?
They're in northern Canada, I think. Not being in Australia, I haven't spent a great deal of time on it.
It's like copper, a lot of them seem to be in that west coast of America, right?
Yeah.
In Utah and Nevada.
So look, without me knowing exactly where they are, and I'd be a bit embarrassed that I don't know.
Well, it's okay. There's like 1,500 of these.
Yeah. Well, let's talk a little bit more generally then. I mean, if you put out an intersection today that was 20 metres at 5 grams gold, good intersection, is that going to move the market for your story? Well, I think there's enough people who'd be circumspect and say, it's gold, okay, so it's not dragging me into it. And you need to do another 3 of them before I start to really sit up. So I think that speaks to sentiment. Outlook for price, all those things are captured in sentiment. If you put out 20 metres at 5% copper, and I've picked that deliberately, the gold versus copper, because if you try to come up with a gold equivalent or a copper equivalent, it's you can impute metallurgy and all the rest of it. You often find that if you've got 1 gram gold, you're not too far off of 1% copper. So you can flip that over. So 5% copper, let's say over 20 metres. I think that intersection would have people sitting up straight in their seats and saying, well, we need to have a piece of this. And we're prepared to speculate on that one intersection up to a market cap of about 250 mil. So, I think copper sentiment is that way because you can see that it does have a story. Now copper has weakened by about 25% from its peak. Interestingly enough, the peaks of all of these commodity prices overlap in time by about 6 months. So, copper has been subject to very similar forces. It just hasn't fallen nearly as far. as some of the pinups, the lithiums of this world. Or
But
the
do you think
nickels.
that's because it's more diversified?
Yeah, it's a much bigger
user?
market, much bigger market, far more customers. And I mean, the big commodities, right? The oil market, the steel market, the copper market, the gold market, and what's the other one? Aluminium. So there's 5. Lithium is well outside of that, like by a far, far, far cry, and so is nickel. So the smaller the market, the more propensity for volatility.
So, okay, copper brings us to nickel. So nickel, I'm not overly understanding the situation, but the nickel price has collapsed?
Yes.
And is that more to do with the demand or this thing about Indonesia or...
No, I think it's a whammy. I don't know if it's a double or a triple whammy. And there's been some pretty good articles about this in the press that just capture it at a high level. But the two that I'd point to are battery chemistries seem to have moved away enough from nickel dependency. So, in 2020, I think it was, Elon Musk was saying, bring me nickel, find new nickel deposits, I desperately need it. Moved into more phosphate-based, still lithium, plenty of lithium, but away from the necessity for nickel. And that's kind of left cobalt behind as well. So that's taken some demand out of the market, if you like. But the biggest factor by far has been Indonesia.
They're just producing heaps of it, are they?
Yeah. So for a long time, there had been well understood deposits of nickel in Indonesia. The problem with that nickel was that it wasn't sulfide; it's laterite. So sulfide nickel, you can take out of the ground. It's a reasonably stable complex. You can ship it across the world to known smelters and refiners, and there's an established business model. Laterite ore doesn't tend to ship very far. Sometimes if it's quite rich because it's close to the surface, you can put it on a barge from an island, send it to China, and that's a pig iron product which goes into stainless steel. So you get some iron units and some nickel units in that. But you're selling nickel units for a nickel price in it. But unless you've got a laterite like that, you used to need a very large and expensive, high-pressure, acid-consuming process. That's still the case. Technology's improved, and there is also some electric arc technologies which have evolved to be able to produce a higher quality nickel product, which you can sell. You've certainly done a lot of beneficiation on it by that stage, and you can sell the nickel units more diversely. They don't have to go into a nickel smelter. Likewise, they don't depend on a short barge in order to sell them to someone in China. You could ship it further. So what Indonesia has benefited from is the imposition of that technology, which has liberated some of these laterites, which are very extensive, large, and good quality from a grade perspective. The other thing which has happened is that Indonesia said, well, unless you build that upgrading here, you can't take that nickel.
So that was a while ago, though, wasn't
it? Yeah, it was a while ago, but you've seen the rubber hit the road, and it's really bitten in the last 5 years, where companies which wanted the nickel, for stainless steel in particular, have began to invest in industrial parks. And Indonesia has put aside ground close to these deposits in central Sulawesi for people to build these plants. And a huge investment had taken place. I mean, you don't hear about it in Australia. But
would you consider that a smart policy then? From their point of view?
As a coincidence in time, yeah, it's been very successful for... Indonesia has now cornered 50% of the nickel market, and it's cornered it in the lowest half of the cost curve. So they've brought on cheap nickel units at a time when they could do it in vast volume. And those policies have coincided. Now, it might not have worked 20 years ago if they'd tried that, because the technology might not have been so supportive, and the nickel market might not have been either, in terms of selling that into the Chinese economy, which is where a lot of it has gone. So they now find themselves having created the price, and it's very difficult to see the nickel price creeping up again. But the long-term context in nickel, I mean, I've heard a lot of people who've worked in nickel for a long time say nickel mining is like wheat farming. Every 10 years you have a great year. You pay off all your debts, you buy new tractors, you have a great barbecue and invite your mates, and then you go into debt and off you go again.
So I had this vision of you observing these existing mines. What's it? Is it IGO, the big one that just went into care and maintenance?
Yep.
Are you not going to keep an eye on that one for the day that year that nickel does come back, and then they'll start it up again?
Well, IGO...
Was there a better one?
Long-term watch, I think, would probably be my reaction to IGO. IGO's, in the last, maybe it's 5 years, it could be slightly longer, they've pivoted from gold they had an interest in Tropicana, big gold
I know
project
the one
in Western
the
Australia.
other one bought. Regis bought?
Yes.
Yeah, Regis
Yep.
bought it. Yeah.
So they had an interest in that. They sold out of the gold. And, there was probably definitely an aspect of you're a junior joint venturer there. The market was pushing them away from it. Don't be a junior joint venturer in a gold mine, which is old. Yeah, it was old news at the time. And they were already in nickel because they'd taken over a company called Sirius, which had got them into the nickel market in a much bigger way than they already were. They had some nickel mines around Kambalda principally. And they pivoted, so sold gold and then bought into Greenbushes. And by that I mean they bought a minority interest in the Greenbushes mine, an interest in the upgrading that took place from there, and they didn't get any offtake for it. They were just financial participants, but it made them a lithium company and a nickel company. And I mean, if you take an last 18 months perspective, well, that was the hardest place to be. So they took over Western Areas, which had.
I remember that one. Yeah.
So they had two.
That was been around for years.
Fairly
hasn't it?
substantial nickel sulfide underground production facilities, and they are now. Well, they're underwater as far as cost versus revenue goes, and they've had to mothball some things there. So
anyone watching this is like going, okay, why exactly should I care about all these duties? Because it's basically gold. I feel like we're left with gold is the place to be, right?
Well, it's been the most robust commodity
because it's still got good margins if they get there.
Yeah,
and the big guys are cashed up.
Well, and there's one of the things which I suppose we inject into our investment process is how levered are these opportunities to the consolidation of gold? And that's just a politically correct way of saying, are they going to be taken over? Is there an M&A angle? As an investor, you have to be careful about that because you don't want to sit there and go, I'm buying that because I think it'll be taken over. Likewise, you can't say to a company, I'm buying you because I think you'll be taken over. So it's a back of the mind thought. And, to each of the companies that we've invested in that have gold, we've bought them project and people first and foremost. So we're very comfortable with the assets which we're engaged with there. But the fact remains that because they're in Western Australia, because of the position that they are in Western Australia in some cases, or because of the asset that they have, which is already of a strategic size and shape, they are things which are more leveraged to an M&A outcome. And as an investor, you go, well, there's now a second exit here. They can either be successful and we sell it, or they can be, someone creeps up and buys it.
And who's going to be buying? Are you thinking like Ramelius or one of those crowd, or those mid-tier?
There's no more Newcrest, and they weren't so much a predator anyway, I don't think. The Northern Stars are of this world. I think, they're still chewing like crazy to digest the assets that they consolidated over the last, over say the 5 years leading up to 2 or 3 years ago. And good assets generating good cash flows. So that, they're in harvest mode, I think, at the moment. There's the Evolutions, which are sort of in that mid-tier of gold. With them, I think they're digesting as well. The Rameliuses have made no secret of the fact that they want an additional production hub. So, there are things which are up for grabs. They've also shown that they're very good at trucking ores. So if they have a mill and there is isolated resources in the ground, that is something which I think that they would look at. The Silver Lakes of this world have also, expressed similar interest in that kind of thing. And they
Gold Road?
Sorry?
Gold Road? Are they hunting?
Maybe. Gold Road, I think, has had an active business development function, but hasn't been... They've all consolidated in their own way. So Gold Road took over what was probably an investment company, which had a big interest in De Grey. So they've kind of, moved into that space like that. And to be engaged in M&A, there's a point where you say, we've either got to go or back right off. And... we haven't seen Gold Road go at an asset. We've seen them go at a company, but not go at an asset. So Ramelius we've seen over and over. Silver Lake they've sporadically had a go at things. So I think they are. But to me, I mean, we've had an absence of North American money in the gold M&A market in Australia for maybe not quite a decade. But they moved out of Australia, the big North American gold producers. They left for several reasons. Their assets, they'd taken to a level where they were probably tired under their command. So, they weren't making as much money out of them, and the currency had moved a long way against them. So it no longer made tremendous sense for them to be holding Australian currency gold assets. But that factor has reversed. So the investment bankers I talked to were saying, the North Americans are back and they're looking.
Oh, wow.
Which is interesting because if you think about firepower...
they've got it.
They've got it. Ramelius is competitive, just strictly as an example, as an acquirer, and probably a first choice acquirer for a lot of people who might have an asset and be considering what they do with it. But could they compete against a North American if the North American decides that they want to get into something?
I'll just throw a few names at you. These are just occur to me. A lot of the fundies seem to like a one called Genesis Minerals. Is that a goldy you follow?
We follow it. Genesis
it's into the phase of building, right? And it's not producing. Is that correct?
No, they're beyond. Yeah, they're producing.
Oh, they're producing?
So Genesis...
how big is it? Do you know?
I couldn't give you their market cap at the moment, but it's institutional size in that it's more than a couple of $100 million. But the recent history of Genesis is Genesis had established a very reasonable inventory of what was probably largely underground gold resources in the sort of south of Leonora, which has been a bit of a hotspot in the gold world in Western Australia recently. A gold rock star, Raleigh Finlayson, supported an issue and then moved in as the managing director, which, he basically got a lot of eyeballs on it and the price went up. Used the currency of that paper then to eventually acquire the Gwalia project from St Barbara. And St Barbara hung on for a while, but I think by the end of that process, it had been exposed that St Barbara wasn't really running that asset to what could have been its full capability, and the market probably supported Raleigh Finlayson at Genesis to do that. So they're now in the chew like crazy phase, but what they're able to do is say, well, we have an operating mill, we have an existing underground mine, we will optimise all of that. They'd partly taken over, they've now completely taken over Dacian, which was a quasi-neighbour, more the Laverton region, but there's a triangle around these assets. And they had their original starter resources. So that now can all be pulled together into a larger, more consolidated producing centre. And I think as far as they are producing gold, but they are a developer in the sense that they're deploying CapEx to bring new production to bear, and where their costs settle, we know what their projections are, but by the time they get to the end of the CapEx, where are their costs going to be? It's a matter of time to wait and see.
I've got two more. One just sprang in my mind. Ora Banda was one that I followed for a while. It got to like 3 cents, and I saw the other day it's like 28 cents. Do you follow that one, Ora Banda mining?
Ora Banda was like a really hard story for a long time, and part of that was personality, part of that was assets just not making money. And then I think the world just sort of forgot about it. I don't strictly like getting involved in gold assets where it's a renovation, because if you've ever fixed up a house or a car, you can get lucky on buying something like and you go, right, I want to renovate an old car. So you go out and buy something. You wouldn't call it a wreck, because to do it you've got to be in love with it. But you go and buy something which your father or your wife or someone close to you would describe as a wreck. And then you start stripping back paint, taking panels off, and you find that the whole chassis is rusted. So, you go, well, I bought a shape and now I need to backfill it with new bits. And you always make a small fortune out of these things. It's just that you often start with a large fortune to start with. And that has been the problem with Ora Banda, is there's been a lot of large fortunes made into small fortunes. Now, that's not to say that they won't eventually be successful. And I think, there's been a turnover of people and everyone brings their new strategy. And it seems that where they are now, there's probably a little bit more belief behind what their strategy is, and they've rationalised a few things as well. So I couldn't give you any more detail than that, but
that's right. Just one I noticed.
Maybe they're coming to the end of their renovation, but I'm always really reticent in renovations because you just never know what that chassis looks like.
That leads to my next one, which is Spartan Resources. That is also a renovation, is it not?
Yeah. Well, so let's say Ora Banda was buying a 1950s Jaguar E-Type, where you're almost guaranteed...
Are you a car buff?
Yeah. You're almost guaranteed the chassis is going to have some rust in it. It's just a question of how much. Spartan's much, much newer, right? So, maybe you're getting into a...
Mazda or 2008?
Well, no, I'm thinking... I'm a bogan, so I'm thinking VL Commodore, right?
Okay,
and maybe maybe you've launched at something that, is starting to become quite desirable in the collector space, but has also had a lot less time for rust to set in. The problem which had existed in the previous incarnation of Spartan, when it was called Gascoigne, was that they rushed into production, built a brand new mill, and didn't get as much gold out of the hole as they'd estimated they were going to, which is, that's a classic screw up in gold in particular, where you estimate your resources and then you just find there's not as much gold there as you had hoped. It's not to say that it's impossible to get the estimation right, because they eventually do. It's just that you got it wrong in the first place, and there's some real raps on knuckles which need to be
that's kind of
dished
what
out.
Chalice and got in, like...
Oh, no, Chalice hasn't had an estimation problem yet because they haven't mined anything.
That's a different thing. But they had their numbers and the market was like, well, hang on, the market was what we were thinking.
The market was concerned about value and over-optimistic commodity prices. So when commodity prices are in free fall and you pick the peak when the market's going, no, they should be down here. That was Chalice's sin, I think. But so the Gascoigne mining experience was there's not as much gold there. And
Dacian. Is that what happened with Dacian? Because
Dacian was an estimation problem as well. Yeah. If you go back and look at competent persons who signed off on the Gascoigne resource and the Dacian resource and compare these things, you might see some similarities. And it's not to say that a person got it wrong, but that sometimes patterns exist, and that's just something which worries me. So what is new in the Spartan story, and that's where it becomes interesting, is they've discovered, it's safe to say, a high-grade pot of ore which is just beneath the old pit. Now, I was a little bit circumspect about saying discovered because I think they walked in there, or Simon Lawson walked in there and said, well, hang on a minute, there's some high-grade holes there. That's interesting. We should be looking closer at it. So, they've made the discovery by drilling the ballsy holes under it and found it based on evidence that was already there. The science was more of a prospecting approach, if you like. But, full marks on that. And they've replicated that. They've found one or two other things that look like it might be more of the same. Now, that will underpin a restart of that process facility, which already sits there. So if you want to start a gold mine and someone's already built you a brand new processing facility, which, it's low mileage, one old lady owner, you've got to blow the carbon out of it to make sure that the 8 pots still work. But in this case, they've got that processing facility and it's reasonably large. So I'd say probably the part of the equation that they're now worrying about is we have these high-grade things. At what volume can we extract that and make it go through our process facility so that we're not just, you can't put 20 tonnes through something that needs 10 tonnes to run. Or you can't put 2 tonnes through something that needs 10 tonnes to run efficiently.
Hang on, you can't put E10 fuel in a car that runs on leaded because you had this car metaphor going.
Yeah,
it's like that. Is that what you mean?
Or you don't want to be driving down the road in your V8 VL, your Brock, whatever it is, running on 2 cylinders.
Crazy talk.
So I think Simon is a long way down the track now of understanding how. We can get 6 cylinders working, and I suppose the question is on. But I suppose the last part of that is he's still got drilling to do. He's still got growth around that high grade inventory. So keep going with that. Keep moving the edges out.
Well, just to sum it up for the guys here, so they're interested in small cap miners. Like maybe some of them are like an aggressive punk or what have you. So for you, then it's this. Gold junior space. What is the market cap do you think that these M&A hunters will be looking for? Is it like the little ones like 50 million or 100 million, 200 million, or what figures can they throw around as a guesstimate?
Well, look, I think there's going to be North American acquirers looking in gold who would be happy to spend more than $1 billion.
Billion?
Oh, yeah. And that puts things like De Grey in their sights. But do you want to speculate on that? I mean, you might... By the time you get in, experience volatility, and if something happens in the M&A space for that, well, you might have made 5%. You might have lost 5%. So, it's not as sure a story. On the tail of anyone who wants to spend $1 billion, there's going to be people who have liquidity to deploy $250 million, buy a new project, or to offer a co-listing. We'll give you some CDIs that are listed in Australia. You remain a shareholder. You can still sell your stock, but we're going to offer you a premium based by the strength of our own paper. Now, the North American golds haven't been that strong, but they can see that this opportunity is coming. They're starting to sniff around, and they know that if Newmont's taken out Newcrest, And if anyone was to look at something at the next tier down, there's going to be a whole swathe of other lookers that come through. Just like when the Australians started moving off into North America, there was a whole trail of them when trying to do the same thing. So whether it's a good idea or not, don't worry about that. There will be more that follow. So I think the gold space is interesting from that perspective, because I don't see the $10 to $20 million companies being much of a target. They've got to speculate on far too much. And they know, the Canadians know just as well as we do, that if Canada comes to Australia looking for gold, look out, because we already know the asset better than them. And same thing, if you go to Canada thinking you can buy gold there and do better, you're taking a real, there's an arrogant step in that. So I think they're probably looking for a sweet spot, which is going to be between maybe not 50, but maybe 100 mil market cap. Although I would adjust that by saying maybe there's assets in the market that they do understand better as a one-off, like a big heap leach or something like that. Aussies don't get heap leaches, North Americans do. And there are assets like that in Western Australia. So they might drag that threshold down or even establish it at about 100 mil as a token sort of transaction value. But I'd see transactions into the hundreds there as being quite possible.
All right, so our basic takeaways are now gold is interesting for various reasons, price-supported development, M&A. The battery metal wipeout then is a case of watch rather than rush in and try and snatch everything up while it's in.
Yep.
Don't catch a falling knife kind of thing.
Well, if you have a long-minded view, what you need to be prepared to do is to invest through the bottom of that cycle. And that's where your own personal liquidity comes into it. So don't think that you'll get a bargain by buying it at 5, that you'll be able to sell at 30 in 2 years' time. I think you've got to say, I can see a bottom, but I've got to be prepared to pay 5, 2, 1, 6, 7 before you get to your
and hang on for
outcome.
5 years. Kind of thing.
Yeah. And I
Bottom
mean,
drawer it. Kind of
I don't think there's going to be any quick turnarounds in that battery space. So,
All right. Well, thanks for coming in, mate. Don't forget, tell the guys a bit about Lion itself and
yeah, sure.
what you're doing at your desk.
So Lion Selection Group we are investing in the space, in the mining space, in the pre-development space. So we look at all of these juniors, and that is exactly where we want to hunt. We take a very focused approach, so we're kind of like a venture capital style vehicle. I often err away from calling us an investment company. Now, forget what we're classified as. We're classified as an LIC, but I would much rather you think of us as a mining company that deploys capital in the same way as mining companies do, looking at what the campaign of money is going to be spent on, what it's going to produce, and following the company for that reason. But then, once we've developed a focused portfolio, moving the rest of the money towards the best things within that, and then seeing the payoff come from 2 or 3 projects rather than from all 20. We already have money in a couple of stories. There's some which you can't get in the market. They're unlisted. We own very close to 50% of an Explorer, which has got the biggest potential, we'll call it porphyry, but maybe just intrusive related gold or copper thing. It's in the Northern Territory now. It's a small part of our underlying value, but that could have an enormous payoff if they're right about that. And there's some really exciting developments will take place in that company throughout 2024. So you can't get that by investing in it. Your exposure is through Lion. But then we've, as I said, we've started to move into the gold space in Western Australia. We've got a little bit of a company called Saturn, heap leach, very large, kind of thing that North Americans understand, Western Australians don't.
All Victorians.
All Victorians. Great Boulder, Alto, some really interesting exploration stories in gold at the moment, and Sunshine, which is in Queensland. Now we're going to be adding to those names, so I wouldn't say to you go and have a look at those. I'd say to you go and have a look at LSX, because the biggest asset we have is close to $70 million of cash, which is going to be deployed into that space. And if you compare that space to its 2021 prices, they're off now by about 60. I did the maths the other day. It's about 61 or 62% down. So, we're deploying to things which are 80% off.
I will say, from my perspective, the junior mining space is the most trickiest part of the market, because it's just like you don't know who's talking through their, what, and the geology of the projects, and you say they're all trying to flog their story and all that sort of stuff. So yeah, having you there is great. And I should say we owe you a debt of gratitude. I went to the the Rising Resource Conference.
Yep.
You had the Lion clock on there, and we'll put an image up of the clock and we'll finish on that actually. And you sort of said, like, guys, everybody's talking up the battery metal things, all the money's flowing to lithium, but the clock says we've got to go to the down phase kind of thing. And so I've really stayed away. Like all those overblown lithium, people have been, just wiped out on those things. So we dodged most of that largely thanks to you. So thanks, buddy.
Well, I'm pleased about that. You've got to be, when you're trying to make a call which might align with what might be a turning point, everyone wants to tell you how full of shit you are. And you question yourself. And you can be wrong. You could say it on one day. And to some people, if it doesn't come true for 2 days, then you were definitely wrong. Some people, if it was 2 years, you're still right because you sort of picked the theme and the direction and things like that. And we're not trying to influence people's minds around how they invest or anything like that. But, we advertise the way we think about it because it probably endears people to what we're doing. But, you also pull a few punches. Like you don't get up there and say, hey, I think the market's about to collapse, because you can look quite silly doing that. But
all the companies will hate you.
Yeah, and when you say it at an investment conference where all those companies are presenting, it's you do get some nasty emails. But what was in my mind as I was making that talk was I'm very cautious about the prices of quite a few of these equities. Didn't say it quite like that, but you've got to allow people to make up their own minds, and I put the evidence, what I see as the evidence, up, and people can decide from there.
I'm going to ask you about one more stock because it might be interesting to some of the guys here and the market in general. What we did was rare earths. So Arafura was like the darling there for a while, and the darling is looking a bit ragged at the moment, but it's still a deposit there that is of interest, right?
Yep. Well, there has been for 20 years. I mean, when I started in Lion in 2007, Arafura had been known about for several years already.
Okay.
And it's still in the ground. So, I mean, the thing with rare earths is, let me do another cartoon analogy, right? If you and I went out and we said we want to be miners, let's go find a deposit. First thing we find is a gold deposit. With a shovel and a gold pan, we could be in business. It'd be small scale, but my point is, gold is easy to separate. And then if you want to sell it, you take your gold grains or nuggets or bars, you can sell them in the street. I reckon on Collins Street, I could probably find someone who would pay me at least 90% of the spot value of a piece of gold within a day. So it's dead easy to sell. Rare earths are at the other end of the difficulty spectrum. So, in any rare earths deposit, you have a basket of revenues. There's going to be about 10 different products. And those revenues all move independently of each other through time. And each deposit is unique in that it's got different balances of things. So the metallurgy tends to be, it's tricky is an understatement, but let's just say it's a lot harder than a gold pan. There's lots of different chemicals and chemistries which are involved, and then physical and heat-related processes as well. So you're selling something which needs specialised processing. There's a small number of groups in the world which can help you with that. So as a producer of rare earths, you're a price taker, which means that finding the finance to develop it is a long process, not a short one. You need to do a lot of work in defining what those products are going to be and trying to find offtakes. So you tend to see more people fall flat on their face in the rare earth space than you do in the gold space. Having said that, the big pin-up, I suppose, of a successful miner in Australia is Lynas. And they have been on death's door, I don't know, maybe 2 or 3 times in their history, but they are in production. And they've shown how hard it can be. They've had some very good times, but, that volatility of their revenue and the sensitivity of the offtakes, the sensitivity of their waste products are all things which have been challenges for them. If you're a producer of rare earths, at some stage along the way there, you generate a waste product, you are more than likely to generate a waste product which has radioactivity associated with it. And that's just difficult to throw away. Can't go into a tailings dam, you need to treat it in a very specific way. So, all those things add up to complexity. So Arafura has a deposit, it's bona fide, it's got many credentials which are interesting. But I think you need a far more sustained rare earths push than we have seen in the last 20 years.
Do you go along with the idea that ex-China supply is important though?
Yes, yeah, it definitely is. But in the last 20 years, ex-China supply has been far less successful in getting developed. And there's a lesson in that.
So you have to separate kind of like, okay, that's the geopolitics of it. Am I going to make a buck out of this, or it's too risky, let someone else do it?
Yeah.
Kind of thing.
Yeah. Well, I tell you what, as an equity investor, you're not investing in what the commodity price is going to be. You're investing what the share price is going to be. So buying low has never been more important than it is in something like rare earths. But the ability to hold long term. So, I mean, I love the idea of land banking something in rare earths and developing it, but knowing that it's something which will be a good quality asset. So just, rare earths occurrences, there's loads of those. I mean, 3/4 of Western Australia is made up of granites. If you weather a granite, you will concentrate rare earths, which are in all granites, in the clay at the top. So you'll have something that some versatile entrepreneur can come along and say, look, I've got an ionic clay-hosted rare earth deposit. And they're not lying. It's just that it's a really, really shit one because there's a lot of them around and you need something which is quite unique. You need to be able to separate it easily. And most of those weathered granites, that's just not the case. So you need to be looking around for those things which are going to be easier. And they'll have their time. And the equity value will probably be where you make your money. Because if you're going to try and develop it as a standalone company, you've got to look at the history of Lynas to understand how many pitfalls there were and expect to experience those yourself as well.
Cool. All right, well, we'll leave it there. We'll get Hedley back another, maybe next quarter or 6 months or something for
sure.
regular commentary.
We just need to discuss what colour shirt we're both going to wear on that day.
Well, I was going to say, if you want to write in, because you're generally happy to answer any questions, right?
Yes, I am.
So if you've got any commentary about junior resources, mining, outlook, Hedley's fashion sense, we've got the new email, asi@facttail.com.au. That comes through direct to me now. So, or anything in general about Australian Small Cap Investigator. So thanks, Hedley. We're going to go to lunch now and we're even more silly at the market.
Well, Cal, it's been a pleasure talking to you. So thank you very much for inviting me on, and to all of your listeners as well. I'm very grateful for the interest that they show, and like I said, it's genuine. So you collect the questions, send them through to me if you want me to prepare, or if not, we'll go off the cuff.
Cool. All right. Until next time.